Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to go over everything you need to know about life annuities. All right, so when you buy an annuity, you typically have the choice between getting a fixed payment for a fixed period of time or for the rest of your life. Well, the for the rest of your life is what's called a life annuity. And there's different variations of it. I'm going to show you or tell you the different types and which ones we recommend over the others. Okay, so when you're taking an income from an annuity, you have two methods of income distribution. Number one, you can annuitize your contract, and this means that you are giving your lump sum of money to the insurance company. It becomes the insurance company's money, and in exchange, they're going to give you a irrevocable stream of income for the rest of your life. Focus on the word irrevocable. Irrevocable means you give up control of your money, and once you start it, there's no turning back. Okay. Where the other method is you purchase a tax-deferred annuity called, they're typically a fixed annuity, a fixed index annuity, or variable annuity, okay? And then you add a feature called a Guaranteed Lifetime Withdrawal Benefit, or GLWB. And the GLWB mimics what the annuitization does for you in terms of lifetime income, but it gives you, the payments are revocable, meaning you have control over your payments. You can turn it on and off. You can cancel it. You're going to be able to earn interest along the way. There's a lump sum death benefit. When you die, you could get an income for the rest of your life and the rest of you and your spouse's lifetime. If something happens to you, there's an emergency, you can cancel the contract. All the problems that annuitization causes, the GLWB solves. Okay. So I'm going to go over the annuitization options, and then I'll go over the GLWB options. So with a life-based annuity, you're going to get what's called a life-only. There's a life-only payout. Life-only just basically means the insurance company pays you an income for the rest of your life. When you die, they keep the death benefit. There is life with period certain. That is the same thing as life-only, but they have a guaranteed period where if you die within that guaranteed period, your beneficiaries will continue to receive payments. So if, for example, if you had a life with 20-year period certain, it would pay you an income for the rest of your life. If you died within those 20 years, it would pay your beneficiaries for the remaining 20 years. And at the 20th year, when that's done, no more payments. There is life with refund. And that basically means whatever money that you put into an annuity, you're going to get an income for the rest of your life. If you die and there's still money left from your original investment, it will be refunded back to your beneficiaries. So for example, if you had a life with cash refund, it will pay you a payment for the rest of your life. Let's say you had $100,000. You've gotten $20,000 in payments. You die. Your beneficiaries will get refunded the remaining $80,000 of that $100,000 that you put into the annuity. There's joint survivor annuity, and there's joint survivor versions of all the life-based payouts I just went over. But joint survivor basically means it'll pay you an income for the rest of your life, and then it will pay the rest of your surviving spouse's lifetime. So 2 lifetimes for the price of 1, and then you can get joint survivor only. You can get joint survivor period certain, joint survivor with refund. So those are the life-based annuitization payouts. On the flip side of that is the guaranteed lifetime withdrawal benefit. Here, it's pretty cut and dry. Hey, we're going to give you a fixed payment for the rest of your life, or we're going to give you a fixed payment for the rest of you plus your spouse's lifetime, so 2 lives for the price of 1. And then we're also going to give you different payout structures within those single and joint life. The first one being the level payout, which means the payment will stay the same for the rest of the lifetimes, won't go up, won't go down, and it'll stay fixed. There's increasing income, where it'll increase based on several different ways, depending on the annuity contract. But the idea is that you get increases in your paycheck to maintain your lifestyle and keep up with inflation. And then they have what's called an advanced payout, where they pay you a higher payout up front, and then it decreases in the back end, usually around year 11 of collecting income. And then you'll get a highly reduced payout. It's usually about 50% of what the original payment is for the rest of your life. So you have some flexibility there. I think the main differences is, you know, with annuitization, you don't really earn interest. There could be no death benefit. It's very rigid. There's no, once you start it, there's no turning back. The only time that I think there's only really two areas where I think annuitization, a life-only annuitization, is fruitful and advantageous for the customer. Number one, if you're younger than age 59 and a half, you can get a life-only, and we recommend paired with a life insurance policy, or a life of period certain, and you could skirt the IRS 10% early withdrawal penalty for retirement. The other route being a QLAC. So let's just say you're a high net worth individual. You can get a QLAC and defer your RMDs up to age 85. And I just think if you have a non-qualified life-based annuity, you could have the exclusion ratio, so the taxation slightly better than using a guaranteed lifetime withdrawal benefit. Other than that, like I said, GLWB, you have control over your money. You could cancel it. You could turn the income on and off. You'll earn interest along the way. There'll be there'll be a death benefit. Whatever's left in the account will go down to your beneficiaries in a lump sum. You have that flexibility, right? So that's kind of the difference between the life only payouts. Right now, 2026. The GLWBs are typically paying similar or higher payouts for the rest of your life than annuitization. It's usually when you want to start your income over the age of 75 is where the annuitizations will come into play and pay a higher income, not much higher, but a higher income than a GLWB. So my recommendation is to come over to the Annuity Expert and use our free calculator and just compare apples to apples. And then if you need a product comparison, you can always request that from us. There's no cost, there's no obligation, and you can make a decision for yourself. So I hope that answered all your questions. Like, subscribe, leave a comment if you have a question. I can answer it over the next couple of days, and we'll catch you on the next video. See ya.